Good afternoon, friends. We are meeting the live webcast of Advanced Accounting Rapid Revision course. It's a very path-breaking effort by our CA Institute. I hope all of you would be thoroughly benefited out of this. Thanks for joining us. First of all, before I start the class, let me just give a brief introduction about what we are going to do in this classroom. As far as the exams are concerned, these are the most important chapters. Partnership accounts, amalgamation and reconstruction, consolidation, that is holding company accounts, then accounting standards. Though there are many other chapters also, these are the most important chapters, called star chapters. That means if somebody is conversant with these 4 chapters, you can easily score 60 marks or above in the examination. Because you will be getting at least one question from each of these chapters. For example, partnership, you may get a problem for 15 to 20 marks. Amalgamation, again 15-20 marks. Consolidation, at least 15 marks, if not 10 marks you will get. Accounting standard, it's always going to be a compulsory question. Compulsory question, question number 1. That is sure for 20 marks in the exam. So therefore, if you focus on these 4 chapters, basically, the quantum of mark that will appear in the exam will be around 70 to 75 marks. So if you are able to attempt all these questions, easily you can score minimum of 60 marks in this paper. So therefore, I am going to focus on these areas mainly. We'll spend a lot of time on these particular chapters mainly. And afterwards, as per the time available, we will be doing other chapters also. So I may not do these chapters in this order necessarily, but these are the important chapters. I am sure everybody is aware of this. Okay, so what I want to do now is to start with the chapter on amalgamation and reconstruction. Then I will do partnership, like that. In different order we will do it. Okay. Amalgamation and reconstruction, actually these are 2 different chapters. Amalgamation is one separate chapter, reconstruction is another separate chapter. So therefore, there is every possibility that you will get one question from amalgamation, if not on reconstruction. But in certain exams, I found that there are questions from both the chapters. Particularly one of the exams, we got a problem on amalgamation as well as reconstruction. That means from this itself, you could get around 30 marks possible. If not, at least 15 to 20 marks you are going to get from this particular chapter. Okay. So let us now divide it into 2 parts. Amalgamation is governed by AS 14. In other words, this is also based on an accounting standard. Whereas reconstruction problems are not governed by AS 14. So let be very clear. Amalgamation problems are to be solved based on accounting standard 14. Reconstruction problems should not be solved based on AS 14. So let us be very clear. Reconstruction, it's not AS 14, amalgamation AS 14. I hope all all, the material has been given in your link. You will have to use that link to look at the problems we have given. Now, before we start doing any problem, let me just give a brief introduction about AS14. Then we will start doing the problems. If you have any doubts in between, you can always type it. We will be trying to clarify that probably after some time. Okay. I am sure that everybody knows what is AS14 and all, but just before we start doing the problem, let me give a brief idea about that. Accounting Standard 14. For the purpose of AS14, amalgamation has to be classified into either merger or purchase. As far as AS14 is concerned, amalgamation are of two types. Either it is amalgamation in the nature of merger or in the nature of purchase. Most probably in the exam, questions are based on purchase only. Very rarely you get problems on amalgamation in nature of merger. But anyway, we will learn both. That's not a problem. What is amalgamation nature of purchase? Very simple idea. If an amalgamation is not in the nature of merger, it is to be regarded as amalgamation nature of purchase. That means when the amalgamation should be regarded as a merger. There are 5 conditions to be satisfied. All the 5 conditions to be satisfied in order to constitute an amalgamation in the nature of merger. What are the 5 conditions? Number 1, all assets and liabilities are taken over. All assets and liabilities are taken over by the purchasing company. In an amalgamation, you know that there will be 2 companies, 2 types of companies. One is called the transferor company, other is called the transferee company. Transferor company is also known as vendor company. Transferee company is known as the purchasing company. So what happens basically in amalgamation is the purchasing company takes over the assets and liabilities of the vendor company. But while doing so, the purchasing company may not take over all the assets and liabilities. But in order to constitute a merger, the condition is all the assets and liabilities of the vendor company should be taken over by the purchasing company. But that is only the first condition. Like that, we have 5 conditions. Only when all the 5 conditions are satisfied, we can say it constitutes merger. So all assets and liabilities are taken over. Number 2, no revaluation of assets and liabilities. In other words, all the assets and liabilities of the vendor company should be taken over by the purchasing company at book value. There should not be any change in the values of the assets or liabilities taken over. That is second condition. Third condition, the purchase consideration should be in the form of issue of shares to the shareholders. Because when you merge your company with another company, the shareholders of the vendor company will get consideration that will be in the form of shares of the purchasing company. Then only it is regarded as a merger. Fourth condition, shareholders holding at least 90% in value of shares shareholders holding at least 90% in value of shares become shareholders of the purchasing company. The consideration should be in the form of issue of shares, but at least 90% of the persons holding shares in the vendor company should become shareholders of the purchasing company. Then only it is regarded as a merger. Then the last condition, fifth condition will be same business should be carried on after amalgamation. Same business should be carried on after amalgamation. Same business should be carried on after amalgamation. So only if all these 5 conditions are satisfied, this becomes an amalgamation nature of merger. That means if even one of these 5 conditions are not satisfied, it is not merger, it becomes a purchase, amalgamation nature of purchase. Why we should know this? Because in every problem on amalgamation, it is very essential to identify whether the amalgamation is nature of merger or purchase, because the accounting treatment for merger will be different from amalgamation nature of purchase. So therefore, as you come across any problem in amalgamation, first thing you should see whether the amalgamation is in nature of merger or purchase. That means you have to check all these 5 conditions. Whether all the assets and liabilities are taken over, whether there is any revaluation of assets and liabilities, how the consideration is given. At least 90% of the shareholders become shareholder of the purchasing company. The last condition may not be given in the question. If all the first 4 conditions are satisfied, you can assume that 5th condition is also satisfied. But in most of the problems in the examination, you find that there will be revaluation of asset. Some assets may not be taken over. Not all the shareholders will get shares in the vendor company, like that. So therefore, first thing you see whether all these 5 conditions are satisfied, then only you can regard it as a merger. Otherwise, you should regard it as a purchase. Now, the accounting treatment for amalgamation, as I told you, depends upon whether the amalgamation is merger or purchase. How does it change? Accounting for amalgamation as per AS 14. If the amalgamation is in the nature of merger or it is in the nature of purchase. Number 1. If the amalgamation is in the nature of merger, we have to follow pooling of interest method. We have to follow pooling of interest method, in short known as POIM, P-O-I-M. But suppose it is amalgamation nature of purchase, we have to follow purchase method. In short, we call it as PURM, P-U-R-M. So as you get a problem on amalgamation, first see whether these conditions are satisfied. If yes, it is merger, we have to follow pooling of interest method. Even if one of the 5 conditions are not satisfied, it is amalgamation nature of purchase, we have to follow purchase method. Now what is pooling of interest method, what is purchase method? Very simple. When a company merges with another company, or when a company is purchased by another company, there will be something called a purchase consideration. You have to calculate the purchase consideration first. Then if it is a merger, we have to compare the purchase consideration with the paid up capital of the vendor company. Whereas in the case of amalgamation nature of purchase, we have to compare the purchase consideration with the net assets of the vendor company. Sometimes the consideration is same as the net asset or the same as the paid up capital. Sometimes there could be a difference. So depending upon whether it is a merger or purchase, the difference has to be accounted for in accordance with AS 14. That is the difference. So calculate purchase consideration. Whether it is merger or purchase, the calculation of consideration will be same. In this connection, we have to learn what is purchase consideration. Purchase consideration is nothing but whatever shares or debentures or securities or cash, the aggregate of all that given to the shareholders of the transferor company is known as the purchase consideration. In other words, if the purchasing company is going to issue debentures to debenture holders, that should not be taken as part of the purchase consideration. Any payment made to creditors by the purchasing company, that should not be taken as the purchase consideration. Whatever cash or share or debentures are issued to the shareholders, namely the equity shareholders and the preference shareholders, put together the total shares or cash given to the shareholders only will be taken as the purchase consideration. Therefore, whether it is merger or purchase, you calculate the purchase consideration. Number 2. After you calculate that, if it is merger, you have to compare purchase consideration with paid up capital of vendor company. If it is merger, you compare the purchase consideration with paid up capital of vendor company. When you do that, there are 3 possibilities. What are they? Number 1, purchase consideration is equal to paid up capital of vendor company. Then you need not make any further adjustment, because in the place of paid up capital, the consideration issued as shares will be recognized in the books of accounts of the purchasing company. Therefore, if the consideration and paid up capital are one and the same, no further adjustment should be done. On the contrary, if the purchase consideration is more than the paid up capital, for example, the paid up capital of the vendor company is 50 lakhs, but the consideration you are going to pay them is 60 lakhs. That means 10 lakh excess you are going to pay. If you pay excess, what does it mean? You are giving them more money, thereby your reserves get reduced because of that. So what you should do, if the consideration is more than the paid up capital, the excess should be adjusted in reserves by decreasing the reserves. So calculate purchase consideration minus paid up capital, that will be decrease in reserves. Primarily the decrease will be made in the general reserves of the transferring company. If general reserves are not available, you can make this adjustment in the P&L account. So if the consideration is more than the paid up capital, the difference between these two will be a reduction in the general reserves of the transferring company or the purchasing company. What is the third case possible? Purchase consideration less than the paid up capital. So the consideration is less than paid up capital. Suppose paid up capital is 40 lakh, but you are going to pay them only 30 lakhs. So by acquiring this company, by merging with this company, the purchasing company is getting a benefit. When they get the benefit, automatically what happens? The reserves will increase. So therefore what you should do? Paid up capital minus purchase consideration equal to increase in reserves. So calculate the consideration, compare with paid up capital. If paid up capital is more, find the difference. Paid up capital minus purchase consideration. That should be added to the general reserves of the purchasing company. So this is called pooling of interest method. Therefore, if it is merger, follow pooling of interest method, calculate the consideration, compare the consideration with paid up capital. If the consideration paid up capital is equal, no adjustment. Consideration more than paid up capital, difference will be reduction of reserves. Consideration is less than paid up capital, difference will be increase in reserves. That's all. In addition to that, in case of merger, all the other reserves of the vendor company will be taken over by the purchasing company. The adjustment will be made only in the general reserves. Every other reserve, maybe a revenue reserve may be there, balance in P&L account may be there, revaluation reserve may be there. Every other reserve should be taken over by the purchasing company. That means, in other words, you have to record the reserves of the purchase vendor company also in the books of the purchasing company. The excess of consideration or paid up capital otherwise should be adjusted in general reserves only, not in any other reserves. This is how we have to apply merger pooling of interest method. Suppose any of these 5 conditions are not satisfied, then it is amalgamation in the nature of purchase. We have to follow purchase method. Under purchase method also, the first step is to calculate the purchase consideration, which is nothing but the aggregate of whatever is given to the shareholders, equity shareholders as well as preference shareholders. Calculate that. Then you go to the third step. In the third step, you have to compare purchase consideration with net assets of the vendor company. How to calculate net asset? It is nothing but the difference between the assets taken over minus liabilities taken over. In a problem on purchase, not all the assets may be taken over, not all liabilities may be taken over. So whatever assets are taken over, for some asset the revalued figures may be given, for some it may not be given. If it is not given, it is assumed it is taken at book value. If it is given, it is taken over at the revalued figures. So take the list of all assets taken over at revalued figures at book value as the case may be, deduct the liabilities taken over. You will get net assets taken over by the vendor company. This you compare with the purchase consideration. Then what are the 3 possibilities? Purchase consideration equal to net asset, no adjustment. No further adjustment to be done. In the place of net asset, you are going to record the purchase consideration, then no further adjustment will be done. But what is possible? Purchase consideration may be more than the net assets. If the consideration is more than net asset, that means what? You are acquiring net asset worth 50 lakhs, but you are giving them 60 lakhs, you are paying 10 lakh more. On purchase of a business, why are you paying 10 lakh more? It is towards the reputation of the vendor company. That means the excess of consideration over net assets of the vendor company should be regarded as a payment made towards the goodwill of the company. So wherever you find that there is amalgamation nature of purchase and the consideration is over and above the net asset, see the difference. Purchase consideration minus net asset is equal to goodwill. This will be shown as purchase goodwill in the balance sheet of the purchasing company. Purchasing company is paying 60 lakhs, but they are getting benefit of 50 lakhs only. So where they will show the 10 lakh? It is equivalent to some consideration being paid for acquiring the goodwill of the vendor company. So the 10 lakh paid by purchasing company will be towards purchase goodwill of vendor company. This goodwill will appear in the balance sheet of the purchasing company after amalgamation. What is the other possibility? The other possibility is purchase consideration is less than the net asset. Net asset is what you are taking over. You are taking over net asset worth 50 lakhs. But you are giving a consideration of 40 lakhs only. What does it mean? I am getting more benefit, I am giving a lesser consideration. That means in this bargain, I made a gain. The acquisition of business, I made a gain. Purchasing company has made a gain. This gain is in the nature of a capital profit. Therefore, such a gain should be recognized as capital reserve in the balance sheet of the purchasing company. So, if the consideration is more, the excess is assumed to be paid for acquiring the goodwill of the vendor company. If the consideration is less, the gain is of capital nature. Therefore, the difference between the net asset and purchase consideration should be recognized as a capital reserve in the balance sheet of the transferee company after amalgamation. So, in this case, what we should do? We have to calculate net asset minus consideration, that will be equal to capital reserve. Therefore, let us make it very clear. In the case of merger, the difference between the consideration and paid up capital will be adjusted in reserves. Either reserves may reduce or reserves may increase. Whereas if there is no difference at all, reserves also will not be altered. Whereas if it is amalgamation in the nature of purchase, if there is no difference, you simply record the assets and liabilities taken over. Against that, you are given consideration in the form of shares or cash that will be recognized in the balance sheet of the purchasing company without any difference. On the contrary, if a consideration is more than net asset, you record all the assets and liabilities taken over, but you are paying a certain amount more than the assets taken over. Is it not? That difference will go to the balance sheet of purchasing company as purchase goodwill. Suppose you pay less than what you acquire, the difference will go to reserves and surplus under the heading capital reserve. After making this, you will be asked to prepare the balance sheet of the transferee company or purchasing company after amalgamation. And since it is relating to a company, necessarily we have to prepare the balance sheet in the Schedule 3 format. We can't change the format, we have to simply follow Schedule 3 format. I am sure that all of you are aware of the Schedule 3 format of a company balance sheet. So this is the basic idea behind amalgamation. AS 14, it could be merger or purchase. All 5 conditions satisfy merger. Follow pooling of interest method in this manner. Even one condition not satisfied, that means it is not merger. You have to follow purchase method. Then you have to follow this. In addition to that, in the case of amalgamation nature of purchase, one more adjustment we have to do. In the case of merger, I told you all the reserves of the vendor company will be incorporated in the books of the purchasing company. Only general reserve will be adjusted for the difference, if any. Whereas if it is amalgamation in the nature of purchase, the difference will go to goodwill or capital reserve. No reserves of the vendor company will be brought into the books of the purchasing company. That is a big difference. In case of merger, all the reserves other than general reserve will be brought in the books of the purchasing company. General reserve will be subject to adjustment depending upon the difference between the consideration and the paid up capital. Whereas in the case of purchase, no reserves of vendor company will be brought into the books of the purchasing company. Only if there are any statutory reserves, that only should be brought into the books of the purchasing company. So in addition to this, we have to learn something called statutory reserves. Statutory reserves. What is a statutory reserve? A reserve which is created in accordance with the statute for a particular purpose. For example, there may be a reserve called investment allowance reserve. It is created for a particular purpose. Such reserves are known as statutory reserves. If the vendor company has created a statutory reserve and the benefit of reserve is going to be utilized by the purchasing company also, and this happens to be an amalgamation nature of purchase, these statutory reserves of the vendor company should be brought into the books of the purchasing company. Other than statutory reserves, no other reserves of vendor company should be brought into the books of the purchasing company. The difference between consideration necessary, if any, that will go to capital reserve or goodwill, that's all. No other reserves will be taken over in the books of the purchasing company. But if there are any statutory reserves, that will be taken over in the books of the purchasing company. How do you do that? You have to make a journal entry for incorporating the statutory reserves. The journal entry is amalgamation adjustment account debit to statutory reserves account. Amalgamation adjustment account debit to statutory reserves account. That means what will happen? The statutory reserves of vendor company will be brought into the books of the purchasing company by crediting that. Against that there is a debit called amalgamation adjustment account. Then where this will appear in the balance sheet after amalgamation? Statutory reserves will be shown as part of reserves and surplus in the balance sheet of the purchasing company. Amalgamation adjustment will be shown as a deduction in the reserves and surplus in the balance sheet of the purchasing company. You may ask me, what is the purpose? First you are adding the statutory reserve, then you are deducting it, but this is purely for disclosure purposes. You understand? When the statutory reserves of vendor company are taken over by the purchasing company, you have to show that these reserves are still there. At the same time, what is the negating effect of that? Amalgamation adjustment account is debited. So statutory reserves brought in the books will be added to reserves and surplus in the balance sheet of the purchasing company. Equivalent amount of amalgamation adjustment debit will be deducted from the total of reserves and surplus. Both will be shown under reserves and surplus. It may have a nullifying effect, but if you do not show both, that means you are not disclosing that you are taking over the statutory reserves of the vendor company in the books of the purchasing company. So this is the brief idea about AS 14. Based on this only, we will be doing problems and amalgamation. Sometimes in the exam I even found that what are the conditions for merger? 5 marks question was asked. According to AS 14, when does an amalgamation constitute a merger? Like that also questions have appeared. So you should remember these 5 conditions. I have just given some hints about these 5 conditions. But in the examination you have to write all the 5 conditions in full, then only you get full credit for that. In another exam I found that they have asked you to explain what is pooling of interest method and how it is different from purchase method. So questions can be asked not necessarily to do problems on amalgamation, but also maybe some theoretical background about AS 14 also can be asked in the examination. So this is the basic idea behind which we are going to do problems on amalgamation and reconstruction. Now, but it all, there is one common thing about every problem on amalgamation. What is that? That is purchase consideration. Whether the amalgamation is in the nature of merger or purchase, it doesn't matter. We have to first calculate the purchase consideration. Even before you see is it merger or purchase, we can start calculating the consideration. But better always first identify whether the problem is based on merger or purchase, then you start calculating the purchase consideration. How to calculate purchase consideration? For this you should know what is the definition of purchase consideration as given in AS 14. AS 14 tells you purchase consideration is the aggregate of shares or any securities issued by the transferee company and any payment in cash or otherwise, any payment in cash or otherwise given to the shareholders of the transferor company. I told you already, transferor company means vendor company, transferee company means purchasing company. So this is the most important definition for purchase consideration. I repeat, you can even note it down carefully. This is anyway there in the amalgamation standard, AS14 is there. It is the aggregate of shares or securities issued by the transferee company and any payment in cash otherwise given to the shareholders. So this is the most important word in this definition of consideration, given to the shareholders. Just now I told you, if any cash is given to the creditors, if any shares are given to the debenture holders, if any debentures are given to the debenture holders, that should not be considered. So what should be considered as purchase consideration? Only that which is given to the shareholders of the transferor company. It can be in the form of equity shares, it can be in the form of preference share, it can be in the form of debentures, it can be by payment of cash, it can be otherwise, any other assets also could have been given. What is given is not important. To whom it is given? It is given to whom? It is given to the shareholders of the transferor company. That is more important to identify where it forms part of the purchase consideration. So let me make it even more clear. Any payment made to creditor is not forming part of purchase consideration. Any cash or any debentures or any shares issued to debenture holders does not form part of purchase consideration. Any expense of the vendor company paid by purchasing company does not form part of the purchase consideration. Therefore, what is purchase consideration? Find the total of whatever is given to the shareholders of the transferor company. Shareholders get some cash, 20 rupees in cash per share, that is consideration. Shareholders get 1 share for 1 share, that is part of the purchase consideration. Preference shareholders get 10 rupees in cash for every share, that is part of the purchase consideration. Preference shareholders get 1 share for every 2 shares held by them in the other company, that is part of consideration. So therefore, whatever is being given to the shareholders, namely equity shareholders as well as preference shareholders, that only will constitute purchase consideration. Anything that is given to others, creditors, outsiders, bankers, debenture holders, that will not be regarded as part of the purchase consideration. So we have to be very, very clear about that. And also remember, the purchase consideration will not change because it is merger or purchase. You understand? Whether the amalgamation is in nature of merger or purchase, consideration amount will be same only. That will not change. But what will change? The accounting treatment will change. So therefore, identify whether it is merger or purchase, calculate the purchase consideration, then apply the respective method, pooling of interest method for merger and purchase method for purchase. Pooling of interest method and purchase I told you here, but in the case of purchase I told you this also very important. Statute reserve should be brought in the books of the purchasing company by making an entry, amalgamation adjustment account debit to statute reserves. So if one is clear about all these ideas about AS14, then you can do any problem on amalgamation. Definitely you will score very good marks in the examination. If you have any queries, as I told you, you can just put it on the link. We will try to answer that later. Now, I hope all of you having the material with you. You please take page number 16 amalgamation and reconstruction. I have just discussed about AS14 only. That means first I will do problems based on amalgamation. It could be merger or purchase or whatever as given in the material. Later we will discuss reconstruction and try to do some problems on reconstruction also. Sometimes in one exam you got a problem covering both in one problem itself, 20 marks problem. A company is first reconstructed, then amalgamation happens. That way also question can be asked in the examination. I am not sure where I have given it to you. If it is there, we will do that problem also. Otherwise, it is very much available in your study material. You can try that problem later. Now, let us take page number 19, problem number 6. You see problem number 6 in page number 19. It's a very simple problem. If this problem comes in the exam, they may just give you only 5 marks, because this problem is just to calculate the concentration. See, as I told you, you need not know is it merger or purchase. Even otherwise, you will be able to calculate the purchase concentration. So please go to page number 19, problem number 6. Just see that we are going to calculate the concentration. The question goes like this. The abstract of the balance sheet of Messrs. A Limited as on 31st March 20 is as follows. Equity share capital of rupees 100 each is 15 lakhs. 12% preference share capital of 100 each is 8 lakh. 13% debenture 3 lakh. On the above date, Messrs. B Limited agreed to take over Messrs. A Limited on the following terms. A, for each preference share in A Limited, rupees 10 in cash, and 9% preference shares of 100 in B Limited. B, for each equity share in A Limited, rupees 20 in cash, and 1 equity share in B Limited of rupees 100 each. It was decided that the share in B Limited will be issued at a market price of rupees 130 per share. C, liquidation expense of A Limited are to be reimbursed by B Limited to the extent of rupees 25,000. Actual expenses amounted to rupees 30,000. You are required to calculate the purchase concentration. That's what I told in every problem on amalgamation. First you have to calculate the concentration. This problem is specifically based on how you know to calculate the concentration. 5 marks problem. For this purpose, as I told you, you should know what is concentration. You can just go through that. It is the aggregate of shares or securities issued by the transferee company and any payment in the form of cash otherwise given to the shareholders of the transferor company. So therefore, how to calculate the concentration in this case? You see the adjustment A, they are given what the preference shareholders will get. Adjustment B tells you what the equity shareholders will get. Adjustment C talks about liquidation expense of this company to be paid by that company. Therefore, if you are clear with the definition of purchase concentration, you can easily understand that the third point will not constitute purchase consideration, because that is relating to what? Liquidation expense of vendor company, purchasing company agrees to reimburse, that's all. It has nothing to do with purchase consideration. It is not given to the shareholders of the vendor company. So, how to calculate the concentration? Messrs. A Limited. This is problem number 6. Calculation of purchase consideration. Calculation of purchase consideration. Number 1. 2. Preference shareholders of A Limited, to preference shareholders of A Limited. A Limited is a vendor company, B Limited is a purchasing company. What is given to the preference shareholders of A Limited? Adjustment A tells you for each preference share in A Limited, rupees 10 in cash and 9% preference share of 100 each in B Limited. So cash, for every share 10 rupees cash is given. So in A Limited there are 8,000 shares. So it is 8,000 into 10, rupees 10 per share, that is 80,000 cash payment. And for every preference share in A, you will get one preference share in B. So issue of 9% preference shares in B Limited. This is 1 for 1, so 8,000 into 1 by 1 into rupees 100 per share. So preference shares will be issued for a value of 8 lakh. Therefore, the preference shareholders will get 8,80,000 in total. Number 2, equity shareholders of A Limited. The equity shareholders of A Limited will get rupees 20 in cash per share. So cash of 20 per share. How many shares are there in A Limited? 15,000 shares are there. So it is 15,000 into rupees 20. That is equal to how much? 3 lakhs. 15,000 into 20, 3 lakhs. Then for every equity share, they will get one equity share in B Limited. But the market price of 130 is the price at which they are issuing it. So issue of equity shares in B Limited, it will be 15,000 into 1 by 1 into rupees 130. For every share in A Limited, B Limited will give 1 share. So there are 15,000 shares. So you will get 15,000 equity shares of B Limited, but at the rate of 130 per share, which is equal to 16,50,000. Therefore, the equity shareholders will get 19,50,000 worth of consideration. Hence, what is the total purchase consideration? That's what we have to calculate. 15,000 into 20, that is 3 lakhs. 15,000 into 130, how much is that? 15,000 into 130, 19,50,000. Sorry, this is 19,50,000. Therefore, total will be 22,50,000. So for the equity shareholders, the consideration will be 22,50,000. For the preference shareholders, 8,80,000. Add it. That will be the total purchase consideration. So it is 31,30,000 total purchase consideration. Total purchase consideration. For doing this, the examination, they may give you maximum of 5 marks. And I am sure you should be knowing that the exam you have to attempt 100 marks in 180 minutes. That means for attempting 1 mark, you have only 1.8 minutes in the exam. Roughly 2 minutes, for example. Therefore, if you get a problem on 5 marks, the time that you can take is around 8 to 10 minutes only. Maximum you can take 10 minutes. but better it is to finish within 8 minutes. Then only it is possible to attempt all the questions in the exam. If you attempt 100 marks in the exam, you will be surely getting minimum 60 marks in not only this paper, every paper I can tell you that. So in order to be able to attempt 100 marks, you should have good practice, good speed you should have, that is very important. So you keep this simple yardstick. If a question carries 5 marks, I should finish it off in maximum 10 minutes. If I go beyond 10 minutes, that means that I don't have time for the other questions. So ensure that if you attempt a 20 marks problem, try to finish it off in between 30 minutes and 40 minutes. Beyond 40 minutes you should not do. You can do in 30 to 40 minutes. So 10 marks problem, you can take maximum 20 minutes, 15 to 20 minutes. Like that you should keep a benchmark for yourself. Then only it is possible to attempt all the problems in the exam. If you attempt all the problems in the exam, as I told you, you can easily score minimum 60 marks in this paper. And once you cross 60 in paper on advanced accounting, it is very easy to clear this group very fast, no problem at all. Of course, you should score minimum marks in other papers also. But suppose you get 70 or 75 in this paper, then that aggregate problem will not be there. That will be taken care of by the excess mark that you get. So therefore, your first focus should be, I should attempt all the questions in the exam. 100 marks I should attempt. If I should attempt 100 marks, I should be able to use the 3 hours properly. Therefore, this is a simple yardstick I am telling you. For 10 marks problem, maximum 20 minutes. 5 marks problem, maximum 10 minutes. 20 marks problem, maximum 40 minutes. You go beyond that, that means you don't have time. Then you will not be able to do the full 100 marks in the exam. You will attempt only 80 marks or 75 marks. Then very difficult to score the 60% marks in the examination. So therefore, whenever we do problems in the classroom also, we will try to do it within the time that is available for us. So then what about the adjustment C? It talks about liquidation expense of A to be reimbursed by B to the extent 25,000. As I told you, whatever is payable or paid to the shareholders only can form part of the consideration. Liquidation expenses to be reimbursed by A is not given to shareholders, given to the vendor company or to some outsider. That will not form part of the purchase consideration. So that clarity should be there. Then only we'll get everything right. So I hope it's clear. Then we will take some other problems. So shall we do next problem? That is, you please go to page number 16. Let us try problem number 1. Page number 16, we will do problem number 1. And this problem, if it comes in the exam, they may give you around 15 marks. That means you are supposed to finish it off in around 30 minutes. Let us try whether we are able to do it or not. Okay? So just go through that. I will be rubbing off the board, and whenever there is a need, I will rub off the board and do it again. So therefore, as I keep doing the problem, you also note it down, so that once I finish it, I may need the board again for some other workings. Okay, right. You see question number 1, page number 16, amalgamation and reconstruction. First question, A and B have been carrying on same business independently. Due to the competition in the market, they decided to amalgamate and form a new company, AB Limited. Liabilities of AB capital, current liabilities are given, assets, plant and machinery, building, current assets. Additional information. The authorized capital of the new company will be rupees 25 lakhs divided into 1 lakh shares of 25 each. Liabilities of A include 50,000 due to B for purchase made. B made a profit of 20% on sales to A. A has goods purchased from B, cost to him rupees 10,000. This is included in the current asset of A as on 31st March of 2020. The assets of A and B are revalued as follows: plant and machinery 5,25,000 A, B 6,75,000, building A 7,75,000, B 6,48,000. E. The purchase consideration is to be discharged as follows: issue 24,000 equity shares of 25 each, fully paid up in the proportion of their profitability in the preceding 2 years. Profits for the preceding 2 years are: A. First year 262,800, second year 212,1,200. B. First year 275,125, second year 249,875. Then number 2, issue 12% preference shares of 10 each, fully paid up at par, to provide income equivalent to 8% return on capital employed in the business as on 31st March 2020, after revaluation of assets of A and B respectively. You are required to, number 1, compute the amount of equity and preference shares issued to A and B. 2, prepare the balance sheet of AB Limited immediately after amalgamation. So, in this problem, they didn't ask you any journal entry and all. Directly they ask you to prepare the balance sheet. But before that, they want you to calculate the number of equity and preference shares to be paid to A and B. Number 1, before we start doing the problem, first thing we should identify, is it amalgamation in the nature of merger or purchase? It's very, very clear that all the assets and liabilities may be taken over, but some of the assets are revalued. So out of 5 conditions, 1 condition is not satisfied. Therefore, this is an amalgamation not in the nature of merger, it is in the nature of purchase. Then what we should do? We have to calculate the consideration and then compare with the net assets of A as well as B. The difference, if any, between that will be either shown as goodwill or as cap reserve in the balance sheet of the amalgamated company. Here, 2 companies are merging to form a new company. Therefore, we have to find out for each company what is the consideration, what is the net asset. For A as well as B, compare for both A and B whether the consideration is more than net asset or vice versa. Accordingly, the difference should be taken as goodwill or cap reserve. Not only that, in this problem, adjustment B tells you liabilities of B include 50,000 due to B for the purchase made. This is a situation known as intercompany owings. Before merger of A and B, there was some transaction between A and B, and because of that, A had to pay a certain amount to B, because they have purchased some goods from B. But once A and B merges together and forms a new company, this is a mutual owing. Neither A is existing nor B is existing. A and B will be liquidated, will be dissolved. So therefore, this liability as well as the asset in the balance sheet of the new company should be eliminated by making an entry known as creditors account debit to debtors account. This another adjustment is there, you have to remember. B made a profit of 20% on sale to A. So while B sold the goods to A, they made a profit of 20% on sale. So out of the goods in stock of A Limited, some goods would have been purchased from B, it's still there. But in that goods, the profit added by B will be there. So you know very well that stock should be valued at cost, not at selling price. Therefore, the difference between the cost and selling price should be eliminated as unrealized profit on stock. This will be adjusted in goodwill or capital reserve and also in the value of stock. So these are the 2 important adjustments you have to do. But before that, first we have to calculate the purchase consideration. So let us try to answer the question number 1. Calculation of number of equity shares and preference shares to be issued to A and B. To calculate this, the aggregate will be the purchase consideration. For this, you have to see adjustment number E. What does it say? The consideration is to be discharged as follows. Issue 24,000 equity shares of 25 each, fully paid up in the proportion of their profitability in the preceding 2 years. So, based on the profitability of A and B in the last 2 years, you have to find the proportion. Based on the proportion, 25,000 shares to be given to A as well as B. So therefore, for A and B, what is the profit for first year, second year? First year profit for A, 262,800. Second year, 212,100. For B, it is 275,125 and 249,875. So you find the total of the profit made by A and B the last 2 years. In that proportion, 24,000 shares to be allotted to A as well as B. So the total of A's profit is 262,800, 262,800 plus 212,200. So it's total 4,75,000. For B, 275,125 plus 249,875, that is 5,25,000. This will be in the ratio of 19:21. If you divide this by 25, you will get 19:25. The total number of shares available is 24,000 shares. Therefore, how many shares to be given to A? B 19/40 will be given to A, 31/40 will be given to B. So therefore, you write number of equity shares to be issued. Total 24,000 shares, but that will be in the ratio of 19:21. So A will get 24,000 into 19/40. That is 11,400 equity shares will be given to A Limited. The remaining equity shares will be given to B Limited, that is 12,600. Total 24,000 shares. Now what is the rate per share or price per share? That is rupees 25 given in the question. So therefore, the value of equity shares issued is equal to 11,400 into 25 for A, that is rupees 2,85,000. For B, 12,600 into 25, that is 3,15,000. So in total, 6 lakh worth of equity shares will be given to the shareholders of A and B. In other words, the total share capital of A Limited equity shares will be 6 lakhs. 24,000 shares of 25 each. So equity shares to be issued is now calculated. Like this, we have to now calculate how many preference shares have to be issued. That is the most important calculation in this problem. You have to read it carefully. Issue 12% preference shares of 10 each fully paid up at par. So they decided to issue 12% preference shares at par at 10 rupees. But how many preference shares to be given? For that you have to read it carefully. To provide income equivalent to 8% return on capital employed in the business as on 31st March 2020 after revaluation of assets of A and B respectively. That means first to find what is the capital employed of A and B after revaluation. Apply 8% on that. That will be return on capital employed. The preference share should be issued in such a manner that the 12% dividend on the preference share will be equal to 8% return on the capital employed. So therefore, first we have to find out what is 8% return on capital employed, then try to find for what value preference share should be issued. So that is the next working. Okay. Now therefore, let us now calculate net assets of A and B. From that we will know what is the value for which preference shares should be issued. A, B. After revaluation, plant and machinery is taken over subject to some revaluation. Plant and machinery of A is 5,25,000, B is 6,75,000. And similarly, building, in that also revaluation is there. Building is taken over at 7,75,000, B 6,48,000. Current assets also taken over, but revaluation not given. That means taken over at book value, which is 163,500 for A, 158,600 for B. Minus current liability will give you the net asset. Even in case of current liability, no revaluation. So take it at book value 623,500 for A and 557,600 for B. You will get capital employed. Capital employed. For A, what is the capital employed? 5,25,000 plus 7,75,000 plus 163,500 minus 623,500. 8,40,000 is the capital employed of A. Similarly for B, 6,75,000 plus 6,48,000 plus 158,600 minus 557,600. That is 9,24,000. If this is the capital employed of A and B, what is 8% return on above? So much of capital employed. What is 8% of that? For B, it will be 73,920. For A, 8,40,000 into 8%. That is 67,200. The problem tells you they are ready to issue preference share at the rate of 12% dividend such that the 12% dividend will be equal to 67,200 for A, 73,920 for B. So if the rate of dividend is going to be 12%, for what value the preference shares to be issued? So you write, therefore value of preference shares to be issued. Value of preference shares to be issued at 12% dividend. That means same income income should accrue, but the dividend should be 12%. For what value dividend preference share should be given? You have to divide this 67,200 by 12%, 73,920 by 12%. You will get the value for which preference shares should be issued. So you have to issue preference shares for 5,60,000 for A, and for B 73,920 divided by 12%. You have to issue preference shares for the value of 6,16,000. Each preference share is issued at par of 10 each. Therefore, number of preference shares to be issued at rupees 10 each is equal to 56,000 preference shares will be issued to shareholders of A Limited. 61,600 shares will be issued to shareholders of B Limited. So now let us summarize. We have answered the question number 1. 11,400 equity shares will be given to A, 12,600 equity shares to B, 56,000 preference shares to A, 61,600 preference shares to B Limited. So now let us summarize. Summary of purchase consideration. A, B, maybe you can have another column total. Issue of equity shares. For A, 2,85,000, for B, 3,15,000, total 6 lakh. Issue of preference shares. For A, 5,60,000, for B, 6,16,000, total 11,76,000. Therefore, the consideration payable to A will be 9,45,000 for A. For B, it will be 9,31,000. So total will be, this will be 8,45,000 for A. B 9,31,000, total will be 17,76,000. So we answered the question A. So A will get 11,400 shares of 25, that is 2,80,000. B will get 12,600 shares of 25, that is 3,15,000. Total 6 lakh rupees worth of equity shares will be issued. Preference shares will be 56,000 shares of 10 for A, that is 5,60,000. 6,16,000 worth of preference share for B, so total is 11,76,000. So the total consideration for A will be 8,45,000 and the consideration for B will be 9,31,000. So the total consideration in the books of AB Limited, the new company, will be 17,75,000, 17,76,000. So we answered question number 1. Now we have to answer the second question. Prepare the balance sheet of AB Limited after amalgamation. So I am sure all of you are doing alongside with me. Therefore I need to rub the board and show the balance sheet to you. As you know, this is amalgamation nature of purchase. The difference between the consideration and the net asset will be adjusted in goodwill or capital reserve. That goodwill will appear in the asset side of the amalgamated balance sheet. Capital reserve, if any, will go to reserves and surplus. But let us show the balance sheet AB Limited. So name is given AB Limited. Balance sheet as on 31/3/2020. That's what you can identify from the question. Balance sheet on 31/3/20. This we have to prepare in the vertical format as per Schedule 3 of Companies Act. So remember, particulars, note, rupees. Number 1, equity and liabilities. Under that, shareholders' funds, share capital, reserves and surplus. Then number 2, SAMPA, SAMPA, that is share application money pending allotment. Though you may not have anything under this, you should simply write it as part of your format. Share application money pending allotment. Then NCL, non-current liabilities. Then finally CL, current liabilities. Total. Then the second segment of the balance sheet, asset. Under that, 2 headings. Number 1, non-current asset. All asset held for more than 12 months period. Then number 2, current asset. Of course, you have to put the total. As you know, whenever you prepare balance sheet of a company as per Schedule 3, you have to prepare notes to balance sheet also. So therefore, let's prepare note number 1, share capital. So this is where the summary which I have done already is going to help you out. Already we have the summary, is it now? 6 lakh will be equity share capital. 1176 will be preference share capital. So you write authorized capital. What is authorized capital given in the question? Adjustment A. They say it is 1 lakh shares of 25 each, but that is only for equity share. But we are issuing preference share also. That means that also will form part of the authorized capital. So remember that authorized capital 1 lakh, equity shares of rupees 25 each, that is 25 lakhs. You are also issuing some preference shares. How much? 1,17,600, 12% preference shares you are issuing of 10 each. That also should form part of the authorized capital. So 11,76,000. So total authorized capital will be 36,76,000. Or you can even put, there are 1,20,000 preference shares of 10 each, 12 lakh. Because I have issued 1,70,600 preference share. I am assuming that is authorized capital. It can be more than that, but not less than that. So remember that when you put authorized capital, even preference share should come under that. That is very important. Now you write issued, subscribed, and paid up. Issued, subscribed, and paid up. Out of 1 lakh share, only 24,000 shares have been issued. So 24,000 equity shares of rupees 25 have been issued, that is 6 lakhs. 1,17,600, 12% preference shares of 10 also have been issued, that is 11,76,000, total 17,76,000. Therefore, against equity share cap, against share cap will be 17,76,000 in the balance sheet. But remember, whenever any shares have been issued for consideration other than cash, we have to mention that in the notes. In this case, all the 24,000 equity shares and this lakh and 17 preference shares have been issued for acquiring a business A and B. Therefore, nothing has been issued for any cash payment. So that information should be given very, very clearly. So you write all the above shares, that is equity as well as preference. All the above shares, equity as well as preference, have been issued for consideration other than cash. All the above shares, equity and preference, have been issued for consideration other than cash. So this is a very critical information. Whenever you find a company has issued any share for consideration other than cash, that information should be given in the notes to accounts. That is the very purpose of notes to accounts, because you can't write everything in the balance sheet itself. In the notes, all this information should be given. So it's a very, very important one. Please remember to note it carefully. Because some examiners are very strict. They see whether you are compliant with the statute requirement of Schedule 3. So if they don't find this, probably even though your question, your answer may be fully right, they may reduce 1 mark for this. So don't take a chance, write it. Next, note number 2, reserves and surplus. Reserves and surplus. See, AB Limited is a new company. Will there be any reserves? There is a possibility, because this is amalgamation nature of purchase. The difference between the consideration and the net assets may result in a capital reserve. That we do not know, is it not? Therefore, what we should do, we should calculate it. Working note number 1, calculation of goodwill or capital reserve. See, we already know what is the purchase consideration. For A, it is 8,45,000. For B, 9,31,000. Since it is purchase, we have to compare this with the net asset. Net asset is nothing but asset minus liability. Already we have calculated that in the form of capital employed. So what is net asset of A? Net asset of A, what was the calculation? It was 8,40,000. This 8,40,000 is a net asset of A. What is the net asset of B? Capital employed. What is the net asset of B? That we have to find out. We have done it already. You can just go and see. You will get the answer. Net asset of B. How much you got? 9,24,000 is the number you got. So, in both the cases, consideration is more than the net asset. That means what? It results in goodwill. The case of A, the goodwill is 5,000, and the case of B, the goodwill is 7,000. So therefore the total goodwill is 12,000. That means no capital reserve at all. So therefore you have to put it as nil. Reserve surplus is nil. But this 12,000 will appear in the intangible assets section of the balance sheet. But don't put it now itself because there may be some more adjustments for that. We will do that later. Share application money pending allotment, nothing is there, nil. Non-current liability also, nothing is given in the question, nil. But we have current liability, remember, subject to the adjustment of intercompany owing, 50,000 given in the question. So better you do a note for that. Note number 3. Current liabilities. A 623,500, B 557,600, total minus intercompany owings of 50,000. That is given in the question. Adjustment number B, that is intercompany owing. So find the total of current liability 623,500 plus 557,600. Total is 11,81,100 minus 50. That is the current liability in the balance sheet of the new company. 11,31,100. Now coming to the non-current assets. First we should show property, plant and equipment, because we have land and building, we have plant and machinery, that should be taken at revalued figures. You prepare a note for that, note number 2. Property, plant and equipment, plant and machinery. You have to consider the revalued figures. Plant and machinery of A as well as B, that you have to consider. How much? 5,25,000 plus 6,75,000. So it is 12 lakhs. That is the total of plant and machinery, like that. Land and building, A plus B you have to consider. Building A is 7,75,000, B 6,48,000, that is 14,23,000. So therefore this is the total of plant, property, equipment. So 12 lakh plus 1423 equal to 26,23,000. So that should be shown here under non-current asset, plant, property and equipment. Then we have intangible asset, that is goodwill. We have already calculated to be 12,000. But you also please see the adjustment number C. What does it say? A has goods purchased from B costing to him at 10,000. This is included in current asset of A as on 31/3/2020. So before A and B merged together, there has been a sale by B to A, which was sold at 20% profit on sale. Of those goods, 10,000 rupees are still there in the stock of B. So you have to eliminate the unrealized profit. When you eliminate that, stock account will be reduced, goodwill account will increase by 2,000. The journal entry for that will be what? Goodwill account debit to stock account. So goodwill will increase, stock will decrease. So you have to add that also. Add unrealized profit on stock. It is 10,000 into 20%. 2,000 rupees. Therefore, the total goodwill will be 14,000 rupees, not 12,000. So write here working note number 1. goodwill 14,000. Now finally we have to do the note for current assets. So I will do this in the place of summary of consideration, note number 5. Because we have to make some adjustments, better to show it in the note. Note number 5, current assets. Current assets. A, B and current asset of A 163,500, B 158,600 and that will be the total current asset. So 322,100. From this you have to deduct the intercompany owings. See, we deducted 50,000 in current liability. Same 50,000 deducted in current asset also minus. Similarly, there is unrealized profit on stock. Stock include 2,000 of unrealized profit. That also we have to deduct 2,000 rupees. So therefore, what is the balance? Minus 50,000 minus 2,000. That will be 2,70,100. That should be shown in current asset 270,100. Now as far as we know, we have done everything. It's time to check whether the balance sheet tallies. If it tallies, that means we have done it correctly. Otherwise, we have to check whether we have committed any mistake. So equity share capital is 1776 plus current liability 1131,100. So the total is 29 lakh 7,100 liabilities. Assets 26 lakh 23,000 plus 14,000 goodwill plus 2 lakh 70,100. That also comes to 29 lakhs 7,100. That means we have tallied the balance sheet, we have done the problem correctly. So this is how we have to focus on completing a problem. I think we have completed that in around 35 minutes or so. Suppose this problem carries 15 marks or 20 marks, we have to finish it off in 35 to 40 minutes. So this is how we have to solve this problem. So now let's take a short break. I am sure you would have had some doubts. You might have given that in the link. We will try to clarify that after the break. Thank you.
இல்லை எனக்கு ஒன்றும் இல்லையம்மா, எனக்கு ஒன்றும் கொஸ்டின் இல்லையா இல்லை.
ஒன்றும் கொஸ்டின் வரல சார், டவுட் ஒன்றும் வரல. நல்லா தேங்க் பண்ணி தான் சார் கமெண்ட் வந்துருக்கு,
அவ்வளோதான். சக்கரை போடக்கூடாது. சக்கரை போட்டாங்க கூட
விட்டானா
தெரியுமா உங்களுக்கு? முரளி கொடுக்கலையா?
முரளி வரல. இங்கே அந்த
சக்கரை நான் போட்டுக்க மாட்டேன்.
அப்படிங்களா? சரி சொல்லிடலாம். முரளி பேங்க்குக்கு போயிருக்கான் போல இருக்கு.
ஓகே. Why is sir teaching AS when everyone wants IndASன்றாங்க? IndAS உங்களுக்கு கிடையாது, இன்டர் கிடையாது.
இன்டர் குரூப் தான் போட்டுருக்கு.
ஃபைனல் பசங்க வந்து உட்காந்துட்டாங்களா?
அது இப்போ ஆக்சுவலாக லிங்க் கொடுத்தவங்க மட்டும் இல்லாமல் பப்ளிக்காக போட சொல்லிட்டாங்க. ஸோ எனி ஒன் வாட்ச் அதனால அவங்க கேட்குறாங்க. அது கிளியராக ஹெட்டிங்கில் கொடுத்துருக்கு. லைவ் ஸ்ட்ரீமிங் கிளாஸ்
வந்து இன்டர் அட்வான்ஸ்ட் அக்கவுண்ட்
கொடுத்துருக்கீங்களா?
இன்டர் குரூப் 2 தான் போட்டுருக்கு.
லிங்க் அப்படி தான் போட்டிருக்கோம்.
சரி சரி சரி. எவ்வளோ பேர் பார்க்குறாங்க?
30 ரெஜிஸ்டர் பண்ணாங்க. 26 35 இருந்துச்சு கன்கரண்டா. இப்போ நீங்க பிரேக் கொடுத்தனால ஒரு 2 பேர் பண்ணிருக்காங்க. 32 30 35 வந்து கான்ஸ்டன்ட்டா 35 to 30.
ஓகே.
இப்போ கால்ல அப்லோட் பண்ண வீடியோ வந்து அப்போ பார்க்கும்போது 40 மெம்பர்ஸ், இப்போ வந்து 250 வியூஸ் போயிருக்கு. அது போயிடும், அது ஆட்டோமேட்டிக்காக போயிடும். பசங்க பார்க்க பப்ளிக் ஆனவொன்னே எல்லாம் போயிடும். முதல்ல வந்து நாங்கள் யாருக்கு லிங்க் கொடுத்து அவங்க தான் பார்க்குற மாதிரி வச்சுருந்தோம். இப்போ எல்லாருமே பப்ளிக் போட்டு
ரெஸ்ட்ரிக்டடாக வச்சுருந்தோம். அது மாதிரி முதல்ல பண்ணோம். அப்புறம் மதியானத்துக்கு மேலே பப்ளிக்
IndASன்னு கேட்குறாங்கன்னா அது ஃபைனலுக்கு தான். அப்படி
இப்போ பப்ளிக் ஆனால் எல்லாரும் பார்க்குறாங்க போல. அதுவும்
இல்லை, அது நம்ம பொறுப்பு இல்லை.
ஆனால் ஹெட்டிங்கில் கிளியராக போட்டு இன்டர் RRC கிளாஸ் தான்
போட்டிங்கல்ல. சரி.
நாளைக்கு சார் தான் ஃபுல்லாக 10 to 5
ரெடி பண்ணிடலாம். செக் பண்ணிட்டு டேப் ரெடி பண்ணிட்டு அதிலே பண்ணுறேன்.
இதில் எழுதுறது பேடில்
ஆமாம் சார், ரெடி பண்ணிடுறேன்.
அது ஏன்னா நீங்கள் ஜூம் பண்ணால் நல்லாயிருக்கும்.
அது
இன்னும் நல்லா தெரியும் பசங்க. அதான் அன்றைக்கி நான் கேட்டேன் மேடம்.
அதை பற்றி சொல்ல நாங்கள் கிராஸ் செக் பண்ணுறதுக்கு டைம்.
ஏன்னா நீங்கள் வச்ச போர்டில் இவ்வளோ பெரிய ப்ராப்ளம்லாம் போடவே முடியாது.
அந்த குட்டி போர்டா நீங்கள் போர்டு பெருசாக இருக்குமான்னு கேட்டேன்னு.
அதான் இதை விட எனக்கு பெரிய போர்டு இருந்தால் தான் ஃபுல் ப்ராப்ளத்தை காமிக்க முடியும்.
ஹாலில் இருக்க போர்டு தான் உங்களுக்கு
ஷீட்டு கூட தான் நான் பார்த்து இது ப்ராப்ளமாக இருக்குது, இது எப்படி இதில் போடுவாங்கன்னு சொல்லிட்டு எனக்கு அது சொல்லவே இல்லை. எனக்கும் தெரியாது அதை பற்றி.
அக்கௌண்டிங்கில் மட்டும் லானா கூட சும்மா பேசிகிட்டு இருக்கலாம், ஏதாவது எழுதிட்டு அழிச்சிடலாம். இதில் எனக்கே இப்போ நடுவில் எனக்கு இது நம்பர் தெரியல, நான் கேல்குலேட் பண்ண வேண்டியதாக போச்சு. மற்றபடினா போர்டில் இருக்கும்.
ஸ்பேஸ் கன்ஸ்ட்ரெயின்ட்
இது பத்தாது. இந்த போர்டு கூட பத்தாது அக்கௌண்ட்ஸ்க்கு. நம்ம கிளாஸ் ரூம் இருக்குது பார்த்தீங்களா,
அதான் லைக் நல்ல செவ்வக போர்டு,
பெரிய போர்டு. அது ஃபுல் ப்ராப்ளத்தை நீங்கள் அப்படியே ஃபுல்லாக ப்ரெசென்ட் பண்ணலாம்.
அது வியூவாகும் அதில் பெருசாக
இவங்க அதுக்கேற்ற கேமரா வச்சு ஜூம் பண்ணிக்கலாம்.
அடுத்த இதுக்கு அந்த மாதிரி வேணால் வாங்கணும். ஒன்று அந்த மாதிரி ப்ரொவிஷன்
இருக்குன்னு நினைக்கிறாங்க. போர்டு இருக்கும்.
அவ்வளோ பெரிய போர்டா?
அவ்வளோ பெரிய போர்டு இருக்காது.
அவ்வளோ பெரிய போர்டு இங்கே
இதை விட கொஞ்சம் பெருசு. இந்த விட்த் நான் சொல்கிறேன்.
இதுக்கு பின்னாடி இருக்க அந்த மாதிரி போர்டு இருக்கா?
அவ்வளோ பெருசு இல்லை, அவ்வளோ பெருசாக இருக்காது. அவ்வளோ பெருசாக இருக்காது.
இப்போதான் அந்த கேள்வியே கேட்குறான்.
லாஸ்ட் ஹாஃப் அன் ஹவரில் வச்சுக்கலாமா சார் அந்த செஷனை, டவுட் செஷனை?
இல்லை நீங்கள் இப்பயே கொடுங்க, நான் அப்போ நான் கிளாரிஃபை பண்ணிட்டு.
ஒரே ஒரு கொஸ்டின் தான் வந்திருக்கு.
ஒன்று தான் வந்திருக்கா?
படிச்சிருவேன்.
என்னன்னு படிங்க, நான் கேட்டுக்கிறேன்.
In question number 1/16 it's coming in goodwill போட்டிருக்காங்க. It capital reserve means what is treatment அப்படின்னு கேட்டிருக்காங்க. And another question வந்து once again you can repeat the underlying profit calculation alone for Q1 போட்டிருக்காங்க.
சரி, அப்புறம்
அந்த சேம் ஃபர்ஸ்ட் क्वेश्चन படிச்சல அது வந்து your profit 2000 add or less அப்படின்னு கேட்டிருக்காங்க.
சரி,
அந்த போர்டு கொஞ்சம் பின்னால் நடக்கணும், வெளிச்சம் இருக்கணும்.
இங்கே வெளிச்சம் தெரியல.
இல்லை போர்டு நடக்கலாம் பின்னாடி ரைட்டாக.
சரி, என்ன நகர்த்தி பாருங்க.
ஏன்னா இந்த வெளிச்சம் கரெக்டாக
ஷேடிங்காக வந்து ஃபைன்
வராது.
கிளார் அடிக்காத.
அடிக்காது.
பத்து வெளிச்சம் இருக்குல்ல.
இப்போ பாரு, இப்போ கரெக்டாக இருக்கும்.
முன்ன விட பரவாயில்ல. பட் நம்ம எதுவும்
இன்னும் கூட நகர்த்தலாம்.
லைட் செட் பண்ணிடலாம் அடுத்து.
இல்லை இன்னும் கூட நகர்த்தினா இன்னும் கிளியாரிட்டி இருக்கும்.
அவர்
இவரு ஜூம் பண்ணிட்டாருன்னு வச்சுங்களேன், இன்னும் கிட்ட போயிடும்.
அது ஓகே. ஒரு வச்சு டேபிள் வச்சிருக்கு. இந்த டேபிள் ஃப்ரெண்ட் நகர்த்தும். இந்த டேபிள் முன்னாடி
இது பெருசுங்க, இது நகர்த்த முடியாது.
நகர்த்தும். அதான் நகர்த்தும் ஃப்ரெண்ட்.
வேணாண்ணா இது டிஸ்டன்ஸ் போதும் சார்.
இல்லை இது
ஆனால் இல்லைன்னா அவர் வேறு சின்ன டேபிள் ஏதாவது அவர் போட்டுக்கலாம். செல்வா வேணா கஷ்டப்படாத.
கொஞ்சம் கஷ்டம் தான்.
இல்லை வேறு டேபிள் வச்சுக்கலாம்.
இப்படி எழுதணும், இப்படி எழுதணும்.
அப்போ இருக்கிறத விட இப்போ பளிச்சுன்னு இருக்க மாதிரி இருக்கு இல்லை?
ஆமாம். இன்னும் கூட பின்னால்
லைட் வந்து அந்த எல்விசிக்கு யூஸ் பண்ணுறது தான். பட் எனிவே
இல்லை அந்த 2 லைட்டுமே அதுக்கு இன்னொரு பின்னால் போனால் அது வெளிச்சம் காட்டாது. இல்லை அவனை ஜூம் பண்ண சொல்லியிருக்கான்.
பாரு
போதும்
போதுமா?
அவர் லக்ஷ்மண் ஜூம் பண்ண சொல்லியிருக்கான். கேமராவை ஜூம் பண்ணால் சரியாக இருக்கும்.
எங்கே ஃபோன் பண்ணுங்க.
அவர் வருஷம் ஜூம் பண்ண சொல்லி கிட்ட வச்சிடலாம்.
இப்போ பரவாயில்ல. பட் ஆனால் வந்து நம்ம லைட்டை செட் பண்ணலாம். நம்ம கிளாஸ் இருக்கும் ஒரு லைட் இருக்கும். இப்போ பேசுறது நிறைய கேட்கும். சின்ன ஸ்க்ரீனாக இருக்குமா? பெருசாக பார்க்கும்போது
என்ன இந்த லைட்டு அங்கே ஆன் பண்ணிடலாமே பெரிய இதுவாக அது.
ஜூம் பண்ணால் பெருசாக இருக்கும்ல?
ஜூம் பண்ணால் கிட்ட கிளியராக இருக்கும்.
அது என்னது அது? லைட்டா அது? எங்கே போகும்? இல்லை இல்லை கொஞ்சம் பின்னாடி நவுத்திட்டாரு மோகன். கொஞ்சம் பின்னாடி நவுத்தினோன்னா கொஞ்சம் பளிச்சுன்னு ஒயிட்டாக இருக்குது.
அந்த கமெண்ட்ஸ் வந்ததுல அது நினைச்சு
மேடம் கொஞ்சம் ஒத்துங்க.
கொஸ்டினே இப்போ இப்போ பளிச்சுன்னு இருக்கு. ஆனால் கிளார் ஆகிடும் அவனை. கீழே அந்த இது அடிக்குது. இது தெரியுது. இது அடிக்குது. இது அடிக்குது. இங்கே இருக்கிறது தெரியுது. அடிக்குது.
அது லைட்டா தான் தெரியுது.
கத்தாதீங்க.
மைக் ஆன்ல இருக்கா? மைக் ஆன்ல இருக்கா? ஓ சரி சரி. கொஞ்சம் நோக்கி சரி பரவாயில்ல. கொஞ்சம் இடம் தான் அடிப்படுறது. அந்த லாஸ்ட் வரைக்கும் வரல.
இந்த லைட் அது சூட் ஆகல. அதான் கரெக்டாக இங்கே தான் பார்த்து.
என்னடாச்சு இந்த வெளிச்சம் இருக்குதா?
இல்லை இல்லை இப்போ இது ஜூம்
ஏன் நான் சொல்கிறேன்னா ரொம்ப பின்னாடி போனால் ஒரு பேப்பரை பார்த்து
இல்லை அந்த டேபிள் நகர்த்திட்டாங்க.
எது டேபிள்?
இந்த டேபிளை
இன்னும் கொஞ்சம் நகர்த்தி
நீங்கள் ஜூம் பண்ணிக்க அவ்வளோதான். நீ ஜூம் பண்ணிக்க சொல்லுங்கள். போதுமா?
அங்கே
இப்போ கரெக்டாக இருக்கும் பாருங்கள். முன்னத்தோட கிளாரிட்டி இருக்கும்.
சார் முன்னாடி போகிறீங்க சார். கேமரா முன்னாடி போகிறீங்க சார்.
பெட்டர்
அதை விட
இந்த லைட்
அது ஆஃப் பண்ணிடலாம். அது வேண்டாம். இத்தலாம் விடு.
போதுமா?
போதும்.
முன்னாடி இப்போ எவ்வளோ கிளியராக
விட இது பரவாயில்ல.
முதல்ல இந்த ஃபர்ஸ்ட் சீனை விட இந்த சீன்
கூடி இருக்கு.
கூடி இருக்கு. அதுதான் சொன்ன பின்னால் தரலாம். ஆமாம்
இல்லைப்பா அந்த வெளிச்சம் வருதுப்பா.
அடியில் கட் ஆகும்.
கீழே வருது.
கீழே லைட்டாக இருக்கு.
நான் சொன்னது டிரான்ஸ்பரண்ட் பண்ணி கிளாஸ் போர்டு நம்மளே தெரியும் கிட்ட போனால். அது தெரியாது. ரஃப் போர்டு.
அன்பப்ளிஷ் பண்ணிட்டேன்.
பார்த்து
பார்த்து இல்லை எடுத்துகிட்டு போயிடலாம்.
ரீஃபண்ட் பண்ண போகிறோம்.
அதுக்கு தான் ஏன் நம்ம நிறைய சேர்த்துக்கணும். கிளிக் பண்ணல. நான் அன்பப்ளிஷ் பண்ணிட்டேன்.
எல்லாருமே ரீஃபண்ட் பண்ண சொல்லிட்டாரு. கிளாஸ் கேன்சல் ஆன மாதிரி.
இதெல்லாம் நடக்க போகுதுல்ல ரெகுலர் கிளாஸ் நவம்பருக்கு அது போடுவோம்.
இது இருக்கு.
பேஜ் சேவ் ஆகிடுப்பா.
அது ரெஜிஸ்ட்ரேஷன் எப்போ
கால் பண்ணி நேகுறார் மேடம் கீழே இருந்து.
ஸ்டார்ட் பண்ணலாமாப்பா? என்ன ஏதோ கொஸ்டின் சொன்னீங்க? கேபிட்டலிசம் மீன்ஸ்னா என்னன்னு கேட்கலாம். இந்த மாதம் எக்ஸாம் வருது, இப்போ போய் கேட்குறேன் அது என்ன.
கேபிட்டலிசம் மீன் யூஆர்பி ஆட் ஆர் லெஸ் அப்படின்னு கேட்டிருக்காங்க.
ஏற்கனவே படிச்சுட்டு வரணுங்க, ரேபிட் ரிவிஷன் கிளாஸ் தான். இப்போ போய் கேட்டால் என்ன சொல்லுங்க?
உங்களுக்கு மெசேஜ் வருமா?
இந்த கமெண்ட் பேசு.
Can you once again repeat and please?
Okay, just now I got some questions. For question number 1/60, it is coming goodwill. Yeah, that's what we have done. Consideration for A is 8,45,000, net asset is 8,40,000. For A it is 5,000. For B, consideration is 931, net asset is 924, it is 7,000, total 12,000 rupees. Capital reserve means what is the treatment? I told you if it is capital reserve, we should show it under reserves and surplus. If it is goodwill, it will come under intangible assets. Because in this problem we got goodwill, we are showing it under intangible assets. Suppose if the consideration was less than the net asset, the difference will go to reserves and surplus under capital reserve. Once again repeat unrealized profit on, okay. What is unrealized profit on stock? See what happened before A and B met together, B had sold some goods to A. That is what is given in the question. A has purchased some goods from B. Cost to him is 10,000. Cost to him means cost to A. So A purchased goods from B. A purchased goods from B. Cost to A is 10,000. But when B sold the goods to A, they have made a profit of 20% on sales. That means this is including the profit added by B to A, which is 20% on sale. But when you merge A and B together, the stock of A and B will be the stock in the books of the new company. But that 10,000 rupees is inclusive of 20% profit added by B to A. Therefore, you have to eliminate it. You know, stock should be valued at lower of cost or market price. Lower of cost or market price. Here, the 10,000 is at selling price, including 2,000 profit. So therefore, how to reduce it to cost? You have to reduce it 2,000 rupees from the stock value. So what is the unrealized profit on stock? It is 10,000 into 20%. That is rupees 2,000, because it is given profit on sale. So if 10,000 is the selling price, 20% is 2,000 rupees. When you reduce from stock, you have to credit the stock account. What is the corresponding debit? In case of amalgamation nature of purchase, you have to debit that to goodwill account. Suppose you got capital reserve on account of this, you have to debit the capital reserve account. In this problem, already you got 12,000 rupees of goodwill. Therefore, we have to make a journal entry like this in the books of the purchasing company. Journal entry, goodwill account debit. to stock account. That means in stock you have to reduce 2000, in goodwill you have to add 2000. That's what I did in note 5. The total current asset stock is included. In the 2000 rupees is included. So I reduced it 2000 from the total current asset. I added 2000 to goodwill. So earlier the goodwill was 12,000. Now another 2000. Completely it will now be 14,000 rupees. So unrealized profit on stock should be added to goodwill, deducted from stock. It is not add or less, double effect. Add to goodwill, deduct from stock. So goodwill will increase, stock value will decrease. That is the answer for that question. Okay. We are now learning Advanced Accounting Group 2 Inter. For Inter, Ind AS is not applicable. Only AS is applicable. Therefore, we don't learn Ind AS in this classroom. When you come to final level, definitely we will learn Ind AS. Okay, because somebody has asked why everyone wants Ind AS, you are teaching AS. Because AS is in a syllabus, Ind AS is not in a syllabus. Therefore, we are teaching AS. Okay? Yes. Now we will do the next problem. Page number 16, you see problem number 2. That also we will try. Second problem, page number 16. A Limited and B Limited were amalgamated on and from 1st April 2020 and formed a new company C Limited to take over the business of A and B. It's very similar to the first problem in terms of what is happening. Even in the first problem, A and B became a new company, AB Limited. Here also, there are two companies given A and B, but they want to form a new company called C Limited. The summarized balance sheet on 31.3 are as follows. All the rupees given in crores, share capital equity shares, 10% preference shares, revaluation reserve, general reserve, investment allowance reserve, P&L account, 15% debentures of 100 each secured, sundry creditors, bills payable. Asset side you have land and building, plant and machinery, investment, stock, debtors, bill receivable, cash and bank. Additional information. A. C Limited will issue 6 equity shares for 10 equity shares of A Limited and 2 equity shares for 5 equity shares of B Limited. The shares are issued at ₹30 having a face value of 10 per share. So the new company is going to issue equity shares to shareholders of A as well as B in the proportion of 6 for 10 for A and 2 for 5 for shareholders of B Limited. Face value of share issued is 10 but issued at 30. That means the shares are issued at a premium of 20 per share. Preference shareholders of two companies are issued equivalent number of 15% preference shares of C at a price of 120 per share, face value 100. So in the case of preference shareholders, they will get 1 for 1. It is not 2 for 5 or 6 for 10 like that, but they will issue at 120 per share, but the face value is 100. Therefore, preference shares are also issued at premium of 20 per share. 15% debenture holders of A and B are discharged by C, issuing such a number of its 18% debentures of 100 each, so as to maintain the same amount of interest. See, the books of A and B, the interest rate is 15%. They are getting a certain interest income. But they are going to get debentures of C Limited, but the interest income is going to be same. Accordingly, you have to find out for what value debentures will be issued by C Limited to debenture holders of A Limited as well as B Limited. Investment reserve is to be maintained for 4 more years. This is what I told you. If the amalgamation is in the nature of purchase, all reserves will not be considered. But if there is a statute reserve, that should be taken over in the books of the purchasing company. In this problem, Investment allowance reserve to be maintained for 4 more years. That means it is statute reserve. That should be brought in the books of the purchasing company by making an entry amalgamation adjustment account debit to investment allowance reserve account. Prepare balance sheet of C Limited after amalgamation. The amalgamation took place in the nature of purchase, so don't have to worry. The problem itself tells you this is amalgamation nature of purchase. So therefore it is similar to the first problem. We have to first calculate the consideration, then we have to compare the net asset. The difference, if any, will be either goodwill or capital reserve. If it is goodwill, it will be shown in the intangible assets under the balance sheet non-current asset. If it is capital reserve, it will go to reserves and surplus. Now the question is very easy. They are asking you the balance sheet of C Limited after amalgamation. That means in the first page of a solution, balance sheet should be there. The second page you have to show the notes to balance sheet. See how to present the answer, that is also very important. Getting the correct answer is one thing, but how you present the answer. Whatever is asked, that you have to show first. In this problem, they asked you to prepare the balance sheet. That means in the first page, you show balance sheet. Second page, you show notes to accounts. From the third page only, we have to show the working notes. Since I don't have that much of space on the board, first I will show working notes, then I will show the balance sheet. But you should leave first 2 pages blank, because in the first 2 pages you will show balance sheet and notes, third page only you have to show the working note. I am sure you are clear. Okay? Yes. Working note number 1. Calculation of purchase consideration. That is the first working note. We have to calculate individually for each of the 2 companies. For A Limited, what is the consideration? For B Limited, what is the consideration? Both we have to consider. Then this happens to be amalgamation nature of purchase. So therefore we have to check whether this amalgamation results in goodwill or capital reserve. Once we are through with all that, then we can prepare the balance sheet of the new company. Okay? Working note number 1. Calculation of purchase consideration. All the calculation we can do in rupees crores. A Limited, B Limited, total. The total column will be helpful to you when you prepare the balance sheet. Okay? So that's why I've added one more column, total column. Now see the adjustment A. To equity shareholders of A and B. C Limited will issue 6 equity shares for 10 shares of A Limited. So if you have 10 shares in A, you will get 6 shares in C Limited. So how many shares are there in A Limited? A Limited share capital is 50 crores. Of 10 each means there are 5 crore shares. So it will be 5 crore into 6 by 10 multiply by 30, because equity shares issued at the value of 30 per share. So for A, how many shares will be given? 5 crores into 6 by 10 into 30. So 5 into 6 by 10 into 30. What is the answer? You will be getting 90. 5 into 6 by 30 So 90 crores is the value for which shareholders of A will get equity shares from C Limited. What about B? 2 equity shares for 5 equity shares of B Limited. So if you hold 5 shares in B, you will get 2 shares in C. There are 4.5 crore shares in B Limited. So 4.5 crores into 2 by 5 into 30. How much? 4.5 into 2 by 5 into 30. That is 54 lakhs. So what is the total? 90, 54, that means 144. So equity shares will be issued for 144 crores. But this includes premium of 20 rupees. Okay. Then number 2. Preference shareholders of 2 companies, what they will get? 2 preference shareholders of A and B. Preference shareholders A and B. They are issued equivalent number of 15% shares of C at a price of 120. That means for 1 for 1, if you hold 1 share in A, you will get 1 share in C, and similar for B also. So how many shares are there in A? The preference capital of A is 20 crores, but per share is 100. That means how many shares will be there? 20 crores by 100, so many shares. 0.2 crore, that means there are 20 lakh shares. In A there are 20 lakh shares into 1 by 1 into rupees 120 per share. So 20 into 120. That will be 24 crores. 24 crores is the value for which preference shares will be issued to shareholders of A Limited. In case of B Limited, there are 14 lakh shares. You will get 1 for 1 at the rate of 120. Here also 120. So 14 into 120. That is 16.8 crores. 16.8 crores. Therefore, the total will be 40.8 crores. So, the total purchase consideration will be 144 equity share capital plus preference share capital 40.8, that is equal to 184.80 crores. 184.80 crores. Now let us also calculate what is the equity share capital, what is the premium, what is the preference share capital and premium. It will be useful for us when you prepare the balance sheet. So you write summary of purchase consideration. Number 1, issue of equity shares. How many equity shares are issued in total? A is getting 90 crores, per share 30 means they are getting 3 crore shares they are getting. So A is getting 3 crore shares. B is getting how many shares? 4.5 into 2 by 5. They are getting 1.8 crore shares. So total 4.8 crore shares they are getting. at the rate of 30 will be equal to 144. So into 30 will be 144. But in this 144, capital will be how much? 10 rupees only. That means 48. Security premium will be 96, 20 rupees per share. So equity share capital will be 48 crores. Premium on that will be 96 crores. Like this, issue of 15% preference shares. How many preference shares he will get? 20 lakhs. P will get 14 lakhs. So total 34 lakh share at the rate of 120, that is equal to 34 into 120 equal to 40 crores 80 lakhs. In this capital, how much? Premium, how much? Capital will be 34 crores. Premium will be the balance 6.8. So when you prepare the balance sheet of C Limited, equity capital will be 48 crores and preference capital will be 34 crores. Security premium will be 96 crores from issue of equity shares, 6.8 crores from issue of preference shares. So it will be easy for you to prepare the balance sheet. You have the summary here. Next, another working note for what? Calculation of goodwill or capital reserve. Because this is amalgamation, the nature of purchase, the difference between the consideration and net asset will be either goodwill or capital reserve. So A, B, total rupees crores. Already we have determined the consideration, that is for A how much? 114. For B 70.8. So A 114, B 70.8, total 184.80. Now we have to calculate the net assets of A as well as B. See, in this problem, all the assets are taken over and all the liabilities also taken over. So what is the total assets? Total assets A 140 and there is no revaluation also. B 100. So total asset taken over 240 minus liabilities taken over. Bills payable 12 and 5, total 17. Sundry creditors 19 and 7, total 26. Then debenture, here only we have to be careful. You have to read adjustment C for this. 15% debenture holders of A and B are discharged by C, issuing such a number of its 18% debentures of 100 each, so as to maintain the same amount of interest. What does it mean? In A Limited, debenture value is 4 crore. 15% interest will be how much? 60 lakhs. Similarly, in B Limited, 5 crores is the total debenture value. 15% is 75 lakhs. C Limited will issue 18% debentures such that the interest amount will not change. For what value debentures should be issued? How to get that answer? It's like this. For A, it will be 4 into 15% divided by 18%. See, in A they are getting 15% of 4 crore. In B they should get same interest at 18%. So for what value debenture should be issued? Like this you have to calculate. So 4 into 15 by 18, they should issue debentures for an amount of 3.33, 3 crores 33 lakhs 33,000 and odd. For that value, debenture should be issued by C Limited to A Limited. What about B? In B Limited, it is 5 crores into 15% divided by 18%. So 5 into 15 by 18, 5 into 15 by 18, 4.17 you are getting. You are getting 4.17. That means in total you have to issue debentures for 7.5 lakhs. 7.5 crores, sorry. So total asset taken over minus liability taken over, you will get the difference as goodwill or capital reserve. So what is the net asset of A Limited? 140 minus 12 minus 19 minus 3.33 is 105.67. That is for A. For B, 100 minus 5 minus 7 minus 4.17, 83.83. And total 240 minus 17 minus 26 minus 7.5, 189.5. So, is it goodwill or capital reserve? If consideration is more, net asset is less, it is goodwill. If net asset is more, consideration is less, that is capital reserve. So, if this is A and this is B, you find A minus B. If A minus B is positive, that is goodwill because consideration is more. If A minus B is negative, it is capital reserve. So let us see goodwill or capital reserve. Minus means capital reserve, plus means goodwill in this problem. So 114 minus 105.67. So in the case of A, it is 8.33 crores goodwill because consideration is more. What about B? 70.8 minus 83.83, you are getting minus 13.03. So by taking over B, that's a reserve of 13.03. But both the companies are taken over. So what's the net effect? Total is 184.8 minus 189.5, that is 4.7 minus. That means in the balance sheet of C Limited, there will be a capital reserve of 4 crores 70 lakhs, which is the difference between 8.33 and 13.03. You are getting 4.7. So remember, when you prepare the balance sheet of the new company, capital reserve will be 4.7 crores. A Limited, there is a goodwill of 8.33, B Limited, capital of 13.03. Because both company acquired by one company, the net effect will go to the balance sheet of the new company. Like this, we have to do this problem. Now, we are clear with everything. We can prepare the balance sheet of the amalgamated company. So therefore, in the first page of your solution, we have left it blank, is it not? In the first page, you show balance sheet of C Limited. Messrs. C Limited. Balance sheet as on 1/4/2020. We can prepare this in rupees crores itself, rupees crores. So particulars, note, rupees crores. First is equity and liabilities. Under that, shareholders funds, share capital, reserves and surplus, note number 1, note number 2. Then second heading, SAMPA, share application money pending allotment. Number 3, non-current liabilities. Number 4, current liabilities. Then you get the total. Then number 2, assets. Under assets, heading number 1, non-current assets. And number 2, current assets. Total. Now, note number 1 will be share capital. That is why I have written the summary of consideration. Share capital will be what? 48 crores will be equity share capital, 34 will be preference share capital. So easily we can note it down from the summary of purchase consideration. So I will rub down the working note number 2 to show the notes to balance sheet. Okay. So I am sure that you are doing the problem alongside with me. Then only it is easy for you, because I will be rubbing off the board as and when there is a need for that. Note number 1. Share capital. Here the authorized capital is not given in the question. Therefore, you simply write authorized, issued, subscribed and paid up capital, all under one line. If you are clear about what is authorized, issued separately, you can write it separately, but it's not clear, everything you put it in one line. So what is authorized capital, issued capital? How many equity shares have been issued? 4.8 crores equity shares of rupees 10 each. That is 48 crores. 34 lakhs, 15% preference shares of 100 each. 34 lakhs, 15% preference shares of 100 each. 100 each, that is another 34 crores. So the total share capital is 82 crores. This you put in the balance sheet, 82 crores. Then note number 2, reserves and surplus. Remember, we calculated capital reserve on account of purchase. You put that first. Capital reserve from working note number 2, 4.70 crores. All numbers in rupees crores. 4.70 crores. Then you see security premium. You refer the summary of purchase consideration, you will see Security premium on equity share is 96 crores, preference share is 6.8. So total 96 plus 6.8, that is 102.80. Since this is amalgamation nature of purchase, no reserves of the purchase vendor company will be brought in the books of the purchasing company, but if there is any statutory reserve, that will be brought into the books of the purchasing company. In this problem, we have investment allowance reserve. This is amalgamation nature of purchase, so that should be brought into the reserve surplus of the purchasing company. Investment allowance reserve. Only statute reserve should be brought into the books of the purchasing company. How much is that? 5 for A and 4 for B, total 9 crores. Therefore, what is the total of reserves and surplus? 4.7 plus 102.8 plus 9, 116.5 minus amalgamation adjustment. Remember, I told you this in the beginning. When the statute reserves of the vendor company is brought in the books of purchasing company, you have to make an entry, amalgamation adjustment account debit to investment allowance reserve. So the reserve is added in the reserve surplus. The amalgamation adjustment should be deducted from the total of reserve surplus. So you deduct it, minus 9. Now you will get what is the net reserves and surplus. So 116.5 minus 9, that is equal to 107.5. This will be shown in the balance sheet of the purchasing company. So the total reserves will be 107.5. Then coming to share application money pending allotment, nothing is there. Non-current liabilities, yes, we have debentures. Better you write note number 3, long-term borrowings. Note number 3, long-term borrowings. The debenture holders of A and B were issued debentures of C Limited. It was issued for a value of 7.5 crores. Each debenture is 100 rupees. That means they have issued 75 lakhs, 18% debentures of rupees 100 each. That will be 7 crore 50,000. 7 crore 50,000. This will be shown in the balance sheet under non-current liabilities, 7.5 crores. Current liability, creditors and bill payable come under the category of current liabilities. So you write note number 4. Note number 4, current liabilities. Sundry creditors and then bills payable. Sundry creditors of A and B total is 26, 19 plus 7, 26. Bill payable of A and B is 12 plus 5, that is 17. So total of current liability 43. 43. That you show under current liability note number 4, 43 crores. Now let's go to the non-current assets. Under non-current asset we have land building, machinery and so on. Therefore, better to prepare a note for that. Note number 5, PPE, property, plant and equipment. So note number 5, property, plant and equipment. Land and building, 38 for A and 25 for B, that is 63 crores. Plant and machinery, 24 from A, 17 from B, that is 41, so total 104. So that will be shown against PPE 104 crores. Investment 10 and 6 A and B, so total 16. Investments in absence of any information is normally shown under non-current asset as non-current investment. So it will be 10 plus 6, 16 crores. Then we have stock, we have debtors, we have bill receivable, we have cash at bank. You have to simply add everything. Inventory, you have to use the term inventory, not stock. Inventory of A 22, B 15, total 37 crores. Debtors and bill receivable should be shown as trade receivables. Both come under the category of trade receivable. Better you prepare a note for that. Note number 6. Trade receivables. Sundry debtors. Sundry debtors A 25, B 20, total 45. Bill receivable A5, B4, total 9, therefore it is 54 crores. That is trade receivable 54 crores. Then finally we have cash at bank, that should be shown as cash and cash equivalents. 16 for A, 13 for B, so it's 29. 16 plus 13, 29. So as far as we know, we have done everything right, but it's time to check the balance sheet total. Is it right? Is it tallying? That we have to see. So on the liability side it is 82 plus 107.5 plus 7.5 plus 43. You are getting 240 crores. Liabilities 240 crores. Assets 104 plus 16 plus 37 plus 54 plus 29. Here also getting 240 crores. That means you have done this problem also perfectly. We got balance sheet total, both asset as well as liability, 240 crores. So you can see in this problem not much of difficulty was there. The first thing was to calculate the consideration. It is nothing but what is payable to the equity and the preference shareholders. Very easily we calculated that. The C adjustment is the most critical adjustment in this problem. So if you want, I will just clarify that once again. 15% debenture holders of A Limited and B Limited are discharged by C Limited by issuing such a number of 18% debentures of 100 each, so as to maintain the same amount of interest. Very, very important. What is the meaning of this? in A Limited, 4 crores is the total debenture value. 15% interest means they will get 60 lakhs. The same interest they should get, but the rate of interest will be 18%. Therefore, for what value debenture should be issued? For more clarity, I am showing like this, okay? You see here. Debenture 5 crores, rate of interest 15%, sorry, for A 4 crores, rate of interest 5%, interest is 60 lakhs. This is what is there in A Limited. The debenture holders of A Limited will get same interest of 60 lakhs, but the rate will be 18%. The question is, for what value debenture should be issued in C Limited? So what you should do? Interest is same, only the amount of debenture, value of debenture will be different. So therefore, for what value debenture should be issued? It will be 4 crore into 15% by 18%. We'll get the answer, that is equal to 3.33 crores. So if 3.33 crores is the value of debentures issued, 18% is rate of interest, the interest will be same 60 lakhs only. So that is the idea behind the adjustment, very important adjustment. So whatever interest they got in A Limited 60 lakh, C also get 60 lakh. The rate changes, what will happen? The value of debentures issued will be less. 18% equal to 3.33, 15% equal to 4 crore. Same way you have to do this for debenture holders of B Limited also. In B Limited, it is 5 crores. At the rate of 15% will be 75 lakhs. If I want to get same 75 lakhs at 18%, what is the value for debentures to be issued in C Limited? That will be 4 crore and 17 lakhs. That is how we got 3.33 crores worth of debentures for A Limited, 4.17 worth of debentures for B Limited. Total comes to 7.5 crores. So 7.5 crores divided by 100 will be 7,50,000. 7.5 lakh, 7.5 lakh, 18% debentures will be issued at 100. Total will be 7.5 crores. So even this problem is slightly easier provided you are able to do it within that time. Here also I have taken a little bit more time in order that I will be able to help you understand everything. But once if you are clear in your minds about how to approach a problem, then it will be very easy to solve this problem. But as I told you already, how to present it. They are asking you to prepare the balance sheet, that's all. They didn't ask you working note and all, but still you have to prepare the working note. So on the first page you show the balance sheet of C Limited. Second page you have to show various notes like this. In the third page only you have to show the working note. Working note number 1 for calculation of purchase consideration. Below that I always do summary. So it is easy for you to prepare the balance sheet. Then this happens to be amalgamation nature of purchase. Therefore what we did, we calculated the difference between the consideration and interest asset. The difference would be either goodwill or capital reserve. But in this problem, 2 companies are taken over. In the case of A Limited, consideration was more, the difference was taken as goodwill. In the case of B Limited, net asset was more, difference taken as capital reserve. But both are taken by one company. The net effect is what? Net effect was capital reserve of 4.7 crores. That's what I have shown here. So I hope you are very clear, and definitely if you have any doubts you can always ask. We will be too willing to answer all your queries. Any doubts are there? Anybody is asking any doubts?
they're just inquiring about the material details. Nothing about their questions.
That's all. Material will be given in the link, ma. Please, if it is not given, definitely they will share it with you. Don't worry. Otherwise, I am sure that you are all very clear. Is it not? Okay. Now, let us try the third problem. Though we have little time to close it today, but still, I will do at least a portion of this now. Balance, you can do it on your own. Or tomorrow also we can continue. Please see page number 17, problem number 3. The following balance sheets are given as on 31/3/2020. All in rupees lakhs. Share capital, Best Limited 20, Bets Limited 10, Reserve Surplus 10 and 8, Other Liability 20 and 2. Fixed Asset 25/15, Investment 5 and dash, Current Asset 20 and 5. Following further information is given. Bets Limited issued shares on 1st April 20 in the ratio of 1 share for every 2 held out of reserves and surplus. That means they are issuing bonus shares. I hope you understand. When a company issues shares out of reserve surplus, it means what? They are issuing bonus shares. 1 for 2. So already in the case of Bets Limited, the total capital is 10 lakh. So now it will become 15 lakhs. Each share 100 means there are 10,000 shares. There are 10,000 shares issued by Bets Limited. Now when they issue bonus, they will issue another 5,000 shares. Capital will become 15 lakhs. It is agreed that Best Limited will take over the business of Bets Limited on the basis of the latter's balance sheet, the consideration taking the form of allotment of shares in Best Limited. So whatever the balance sheet figures, they will be taken over at the same value. Consideration they will give on the basis of allotment of shares in Best Limited. So Best is going to take over Bets Limited by issuing shares of their company to the shareholders of Bets Limited. The value of shares in Best was considered to be 150 and the shares in Bets valued at 100 after the issue of bonus shares. The allotment of shares to be made on the basis of these values. This is what. See, after the issue of bonus share, 1 share in Bets is 100 rupees, 1 share value in Best is 150 rupees. The allotment of shares to be made on the basis of these values. Therefore, you have to calculate what is the consideration to be given to shareholders of Bets Limited. That will be discharged by Best Limited by issue of shares of their company at the rate of 150 per share. Then adjustment number D. Liabilities of Bets Limited included rupees 1 lakh due to Best Limited for purchase from it, on which Best Limited made a profit of 25% of the cost. The goods of 50,000 out of said purchase remained in stock on date of the above balance sheet. This is what intercompany owings of 1 lakh is there. Before merger of Best and Bets, there was some intercompany owing of 1 lakh. So when we prepare the balance sheet, we have to eliminate 1 lakh from the liabilities as well as the assets. And also, the goods are sold at a profit of 25% on cost. Out of the goods sold, 50,000 are still there in stock. Therefore, what we should do? In the goods that is still in stock of 50,000 rupees, we have to eliminate the unrealized profit on stock. You have to reduce it from stock, and if it is amalgamation nature of merger, we have to adjust in reserves. If it is amalgamation nature of purchase, we have to adjust in either goodwill or capital reserve. Make the closing ledger in the books of Bets Limited and the opening journal entries in the books of Best Limited and prepare the balance sheet as on 1st April 2020 after the takeover. So in this problem they are asking you, number 1, ledger of Bets Limited. Here Bets Limited is the transferor, that is vendor company. You have to prepare the ledger accounts. Then they're asking you to prepare the opening journal entry in the books of best, that is purchasing company journal entry we have to make. And then you're asked to prepare the balance sheet as on 1st April 20 after the takeover. So all the three things you have to do: journal entry, books of vendor company, ledger accounts in the books of vendor company, journal entry in the books of purchasing company, and then the balance sheet. So, but before all that, we have to first calculate the purchase consideration, and then we have to show the ledger accounts in the books of bets, journal in the books of best, and then the balance sheet as on 1st April 2020. So, let us calculate the purchase consideration first. And then we can make ledger accounts in the books of vendor company, journal in the books of purchasing company, and so on. Working note number 1, calculation of purchase consideration. Now in this problem, the consideration should be calculated based on how many shares are going to be issued by Best Limited to Bets Limited. But before that, you have to find out what is the amount due to the shareholders of Bets Limited. So the calculation will be done in this manner. Number of shares issued by Bets Limited, 10,000. But subsequently and before the takeover, they have issued bonus shares, add bonus shares. The ratio of 1 for 2 shares. That means you hold 2 shares in bets, you will get 1 bonus share. So it will be 10,000 into 1 by 2. 5,000 bonus shares will be there. Therefore, number of shares after bonus is equal to 15,000. Each share of Bets Limited is valued at rupees 100. So if 15,000 shares are there, each share is 100 rupees, you have to pay a consideration of 15 lakhs. Is it not? So value per share of Bets Limited is equal to rupees 15, rupees 100. Therefore, purchase consideration due to shareholders of Bets Limited will be 15,000 into 100, that is equal to rupees 15 lakhs. If one share is 100 rupees and there are 15,000 shares of Bets Limited, totally you have to pay them 15 lakh rupees. But how this consideration will be given? The problem tells you it will be given by issue of equity shares in Best Limited. You write this will be discharged by issue of equity shares of Best Limited at the rate of rupees 150 per share. So you have to issue equity shares for a value of 15 lakhs. One share will be 150 rupee, that is given in adjustment C. You can see that the value of shares of Best was considered to be 150 and the value of shares of Best was 100. So 15,000 shares, you have to pay them 15 lakh rupees. You will be issuing that at the rate of 150 per share. Therefore, how many shares will be issued? Therefore, number of equity shares to be issued is equal to 15 lakh divided by 150 equal to 10,000 shares. So therefore, what is purchase consideration equal to? Purchase consideration is equal to issue of 10,000 equity shares of rupees 100 each at rupees 150. So Best Limited will issue 10,000 shares of their company, face value 100 at the rate of 150 per share. So that the shareholders of Best Limited will get a consideration of 15 lakhs. Now once the working note is clear, then we have to prepare the ledger accounts in the books of Best Limited, that is the vendor company. In the books of vendor company, what are the ledger accounts you have to prepare? See, the vendor company books of accounts should be closed, that's all. So the accounting for liquidation should be done in this manner. Open realization account, open realization account, then purchasing company account, Best Limited account, then how they give the consideration in the form of equity shares in Best Limited, then you have to show how the settlement is done to the equity shareholders. So 4 ledger accounts you have to open to close the books of the vendor company. So ledger accounts in the books of Best Limited, realization account, purchasing company Best Limited account, equity shares in Best Limited account, and finally equity shareholders account. All the assets and liabilities will be first transferred to realization account. So transfer to realization account, 2 fixed assets, 15 lakhs, to current assets, 5 lakhs. Transfer of asset to realization account. Then transfer of liability, by liabilities 2 lakhs. Then we have to record the consideration. How to record the consideration? Purchasing company account debit to realization account. In this problem it is 15 lakhs. So in the realization account you write by Best Limited 15 lakhs. Purchasing company account debit to realization account 15 lakhs. Then how that is received? It is received in the form of equity shares of Best Limited. So debit equity shares account to Best Limited 15 lakhs. Credit Best Limited by equity shares in Best Limited, that is 15 lakhs. So the purchasing company account will be closed. 15 lakh is due from them, 15 lakh received in the form of equity shares. Now we have to transfer the capital and reserves to the equity shareholders account. So credit shareholders account by equity share capital. Here you have to be careful. What is equity share capital? It was 10 lakh, but you are given bonus, is it not? So it will now become 15 lakh. So it will become 10 plus 5 including bonus, it will be 15 lakhs. We have to transfer the reserves also to shareholders account by reserves and surplus. It was 8 lakh, but now out of that 5 lakh has been given as bonus. So now the balance will be how much? It will be 3 only. 8 minus 5, 3 only. So in other words, earlier before bonus, capital was 10, reserve was 8. But after bonus, capital becomes 15, reserve becomes 3. Ultimately, the shareholders' funds will not change. So it is 18 lakh only. It was 10 plus 8, now it is 15 plus 3. Now we have to close the realization account. Find, is there any profit or loss on realization that is to be transferred to shareholders' account. You see, realization account, the debit side is 20, whereas credit is 17. That means what? There is a loss of 3 lakh. That should be transferred equity shareholders account. Loss on realization. So debit the shareholders account to realization 3 lakh. Now we have to make the final settlement to shareholders. 18 lakh is the total. Out of that 3 lakh loss, that means you have to pay them 15 lakhs as final settlement. For that purpose only you got the shares from Best Limited. So you have to transfer the equity shares to equity shareholders account. The last entry, equity shareholders account debit to equity shares in Best Limited 15 lakhs. So credit the equity shares account by equity shareholders 15 lakhs. So what will happen is equity shares account also will be closed. Realization account is closed. Purchasing company account is closed. Equity shareholders account is also closed. So this is how you close the books of the vendor company. So that also we have done. Then we have to do the journal entries in the books of Best Limited. Journal entries, simple. In the books of purchasing company, we have to make 3 or 5 journal entries. In this problem, there will be 5 journal entries. Because we have intercompany owings and unrealized profit on stock, 5 journal entries will be there. What is the first journal entry? That is for recording the purchase consideration due. Then we will record the assets and liabilities of vendor company. Then we will record the consideration paid to the liquidator. So these are the journal entries in the books of Best Limited. So you write journal entries in the books of Best Limited, that is purchasing company. Journal entries in the books of Best Limited, purchasing company. What are the journal entries? Number 1, business, purchases, account debit. 2, liquidator of Pets Limited account. In this problem it is 15 lakhs. This is the consideration due to shareholders of Pets Limited. Next we have to record the assets and liabilities of Best Limited in the books of Best Limited. But for this purpose you should know, is it a merger or a purchase? If it is merger, the difference between the consideration and share capital issued will be adjusted in reserves. If it is purchase, difference will go to either goodwill or capital reserve. Now is it merger or purchase? I told you for merger we have to check 5 conditions. All assets and liabilities are taken over. Yes, that condition satisfied. Any revaluation of asset liability? No, that condition also satisfied. Shareholders are given shares, that condition also satisfied. Consideration is in the form of equity share, that condition also satisfied. Same business to be continued, that is not given in the question, but I told you that can be assumed if all the other four conditions are satisfied. Therefore, this is amalgamation nature of merger. If it is amalgamation nature of merger, the difference, if any, between the consideration and paid up capital will be adjusted in reserves and surplus of the purchasing company. How to do that? Very simply, just keep recording asset liability and the consideration. The difference, if any, will be automatically adjusted in the reserves and surplus. So debit assets taken over, fixed assets account debit. Fixed assets account debit 15. Current assets account debit 5. Leave one line. 2 liabilities 2 to liabilities 2. 2 business purchases, that is 15. See, what is the difference? The business purchase is the consideration, whereas the difference between these two, what is the paid up capital of the vendor company? The paid up capital of the vendor company was 15 lakhs. Business purchase also 15 lakh. That means no adjustment. So whatever the reserves and surplus of vendor company should be simply recorded. So reserve surplus of vendor company was 3 lakhs. So 2 reserves and surplus. This is the balancing figure. This is the balancing figure. That's all. This is a case of merger. Consideration is 15 lakhs. Paid up capital of vendor company is also 15 lakh. That means no adjustment. You have to simply record reserves as given in the balance sheet of the vendor company. So after issue of bonus share, reserve surplus was 3 lakh. Now also it is 3 lakh. That's all. Then we have to make entry for settlement to liquidator. Third entry. So liquidator of bets limited account debit 15 lakhs to equity share capital 10 lakh. Why? Because face value 100 rupees but issued at 150. That means premium of 50 per share. So that will go to security premium 5 lakhs. So you have noticed that they have issued 10,000 shares. Face value 100, that will go to capital. 50 rupees premium, that will go to security premium. So liquidator of bets account debit 15 lakh to equity share capital 10 lakh to security premium 5 lakh. Normally we will have only 3 entries, but in this problem we have 2 more entries. What are they? Intercompany owing is there. So we have to make entry for that. What is that entry? Creditors account debit to debtors. This is the entry for intercompany owing. Creditors account debit to debtor. In this problem it is 1 lakh. You can see adjustment number 5. Liabilities of bets included 1 lakh due to best. On this they made a profit of 25% on cost. Out of this 50,000 goods are still in stock. So on 50,000 rupees you have to calculate the unrealized profit on stock. You have to make entry for that. What is the entry? You have to debit the reserves and surplus. Reserves and surplus account debit to stock account. Because this is merger, any change in unrealized profit on stock should be adjusted in the reserves and surplus account. What is the amount of the unrealized profit on stock? It will be 50,000 into 1 by 5. Why I put 1 by 5? The profit is 25% of cost, that is 1 by 4 of cost. If the profit is 1 by 4 of cost, it will be 1 by 5 of selling price. That's why I put 1 by 5 of 50,000. That will be 10,000 rupees. So this is amalgamation, nature of merger. Therefore, the difference, if any, between consideration and capital has been taken to reserves. In this problem, no change. Therefore, the reserves as shown in the balance sheet is recorded as it is. But unrealized profit on stock should be adjusted in reserves and surplus. So debit reserve surplus, credit the stock account. When I am removing the profit, what will happen? Reserves will reduce, stock account also will reduce by 10,000 rupees. So these are the 5 journal entries you have to make in the books of Best Limited. After this, you have to prepare the balance sheet of the purchasing company after making all this. So I have done everything, calculation of consideration. I have shown you the ledger accounts in the books of vendor company. I have shown you journal in the books of the purchasing company. So I am just going to ask you to prepare the balance sheet of your own. So tomorrow when we meet, we will check whether you have done the balance sheet correctly. Okay, thank you for today. Tomorrow at 10 o'clock we'll meet once again. Thank you.